Let's try to understand a few of the portfolio metrics. For example, Sharpe ratio. अब Sharpe ratio में क्या है? It's also called as a risk-adjusted return. So whenever in the market someone asks you risk-adjusted return, it means Sharpe ratio in the most simplest sense. So Sharpe ratio, it basically tells you the exit return of a portfolio divided by the standard deviation. So it is the return on the portfolio minus the risk-free rate divided by the standard deviation, right, of those returns, ideally, of those exit returns. So higher Sharpe ratio is always taken as good because that means the risk is low or the risk-adjusted return is much better for those portfolios or stocks. That is, on a per unit risk basis, you are able to generate a higher alpha, right? Your portfolio's return minus the risk-free rate of return is simply your excess return, and the standard deviations or the variances or the volatility of that alpha is less. So on a lesser risk, you are able to make more return. On a per unit level of risk, you are able to make more return. So that is a Sharpe ratio, and one should always prefer a higher risk-adjusted return. Second metric that comes into place is the Trenner's ratio. Again, the numerator, it tends to remain same. That's your exit return or the alpha, or RP minus RF. And there you divide it by beta. Beta is the proxy of systematic risk. Systematic risk is also called as non-diversifiable risk or the market risk. It is that risk which you cannot diversify even by creating a portfolio. The risk which you can diversify by creating a portfolio is called diversifiable risk or unsystematic risk, right? But there, in this case, the risk which you cannot diversify is called as systematic risk or non-diversifiable risk, also called as market risk. So on a per unit basis of systematic risk, how much return you are able to make for the investor. So that's your Trenner's ratio. The interpretation for both the Sharpe and Trenner is same. It is just risk definition in denominator is different. Then you have something called as Sortino ratio. Again, the numerator, it tends to remain same. It's the return on the portfolio minus the risk-free rate. And in the denominator, you have the downside standard deviations or semi-standard deviations. That is, in both your Sharpe ratio and Trenner ratio, we're taking into account, especially for the Sharpe ratio, we're trying to take into account the standard deviations on both the sides. It can be on the positive side, it can be on the negative side. But in case of the Sortino ratio, we're just taking into account the downward standard deviation. That is, basis upon the downward risk of a portfolio, basis upon the downward per unit risk of a particular asset class or security or portfolio, how much exit return or risk-adjusted return based upon the downside risk you are able to provide. Higher the Sharpe ratio, higher the Trenner ratio, higher the Sortino ratio, it is good, it should be more than 1. ठीक है, and more than 1 भी ऐसा है कि 1.1, 1.01 हो, at least 1.5, 1.4 का नंबर दिखे. अगर ₹1 का रिस्क मार्केट में ले रहे हो तो 1.4 उससे कमा रहे हो. It in simple sense. Then you have something called as the information ratio. Information ratio is also called as active ratio. Both are same. Sometimes the students tend to get confused. अब information ratio में क्या है? It is the exit return of the portfolio minus the risk-free rate. Again, the numerator is same as Sharpe or Trenner or Sortino. And we divide that by the tracking error. What exactly is the tracking error? The tracking error is the standard deviation of the returns, standard deviation of the portfolio returns minus the risk-free rate of return. कि अल्फा का क्या डेविएशन है, अल्फा का क्या रिस्क है, ठीक है, अब बेंचमार्क से कितना अगेंस्ट हो, ठीक है. अगर हम सिंपली अगर मैं बात करूं फॉर ट्रैकिंग एरर की, क्या बेंचमार्क से कितना दूर हो, right? If the active ratio of your portfolio is 95-96%, it means you are away from the benchmark to the extent of 95-96%. You might be having some active strategy, kind of a high growth strategy, right? That makes you some kind of benchmark agnostic, and you can focus upon some other sectors and themes per se. So benchmark में नहीं है, या benchmark में कम है, right? So a tracking, or so basically an information ratio, it basically tells you the consistency of the fund manager, right? With how much consistency is able to beat the benchmark. उस alpha की volatility क्या है, कितनी consistency से वो benchmark को beat कर पा रहा है. I'll tell you one more metric, right? I won't explain you that. I'll just like tell you one data point because मैंने उसकी बात बहुत करी है. जो हमारी कंट्री का, इंडिया का ROE है, the return on equity, on an average, it has been 5% higher than the other emerging economies. The standard deviation of that ROE over the past 5 years or 10 years it has been less as compared to the other emerging economies, right? That clearly indicates the higher growth potential in the countries, especially in India, and the stability of the ROE in terms of earnings and shares. Thank you.